In order to succeed in the crypto markets, it's crucial to understand how the underlying systems in exchanges work. Traditionally, trading has been facilitated with the use of order book system. However, new systems such as peer-to-pool model are revolutionizing the way traders engage with the market. These new systems provide traders with added liquidity and improved price discovery, giving them a competitive edge over the market. So what is an order book system? Basically, an order book is a list of open or outstanding orders for a particular cryptocurrency pair. It is a system that is commonly used in traditional centralized exchanges. Buyers and sellers can place orders at specific prices, and the order book matches those orders to facilitate trades. However, there are a few potential disadvantages of using an order book. One is the possibility of market manipulation by market makers, who can artificially inflate or deflate prices by placing large orders. Another is the risk of flash crashes, where prices can suddenly drop due to large sell orders. Therefore, more decentralized exchanges are turning to automated market makers to overcome those drawbacks. They are often used in decentralized exchanges to provide liquidity and facilitate trades between buyers and sellers without the need for centralized authority. A well-known type of AMM-based decentralized exchange is Uniswap. It involves liquidity providers, or LPs, and traders. LPs provide liquidity to the platform by depositing asset pairs, while swap traders can trade those assets using the provided liquidity. The platform uses a constant product formula, X times Y equals K, to determine the prices of assets, ensuring that the value of the assets in the liquidity pool remains constant. When a buyer buys BTC with USDT in the liquidity pool, they are essentially exchanging their USDT for BTC at a certain price with the pool. As the BTC price is actually affected by the supply and demand inside the liquidity pool, this exchange action therefore moves the BTC price higher. Alternatively, if a seller sells BTC for USDT in the liquidity pool, the quantity of BTC in the pool increases while the quantity of USDT decreases, resulting in a decline in BTC price. At Kine Protocol, similar to AMM, we are utilizing the cutting-edge peer-to-pool model for the perpetual futures market. The peer-to-pool model is a self-matching algorithm, where buyers and sellers enter their orders into a liquidity pool together. The matching engine then executes trades at predetermined price, which comes from our price feed oracle. Unlike traditional exchanges that rely on order book, in peer-to-pool model, all transactions are conducted through the central liquidity pool. This model involves two counterparties, the liquidity providers, LPs, and perpetual contracts traders. Liquidity providers deposit their crypto assets such as BTC, ETH, USDT, and USDC, then these assets will be converted to the total USDT value of the liquidity pool with a certain ratio. The liquidity pool bears the net positions generated by both long position holders and short position holders. For example, all the buyers on the platform generate 100 USDT long position in total, while all the sellers generate 80 USDT short position. The trader's total net position is 20 USDT long and the liquidity pool bears 20 USDT short position. Our price feed for a particular asset comes from a weighted average of that asset's price on multiple major exchanges, such as Binance, OKX, and Uniswap. The use of a weighted average price feed can provide a more stable and reliable price for the asset, as it helps to reduce price manipulation and ensure that the price of the asset within the model is more reflective of the overall market. This enables trades to be completed quickly as all trades are executed at real-time price indices. In addition, users can access higher liquidity levels created by the pool. Liquidity providers bear inventory risk and are rewarded by fees income and P&L, while traders can enjoy lower slippage and one-stop market exposures. At Kine Protocol, we are constantly pushing the boundaries of innovation in the crypto trading space. Join us and join the future of trading.